your markets news in Asia, Japan's Nikkei slumped 1.8% and touched a 6-week low. This as investors shared chip stocks and fretted about a possible Bank of Japan interest rate hike. Bank of Japan Deputy Governor Ryozo Himino, in a speech to Japanese business leaders, left the door open to a rate hike at the conclusion of the next policy meeting on the 24th of January. Hong Kong's Hang Seng has added 1.9%, while the Shanghai Composite is up 2.5%. It's a best day since November the 7th in 2024. The Nasdaq fell on Monday while the benchmark S&P 500 bounced off a 2-month low and eked out a slight gain as U.S. Treasury yields stayed elevated, with investors dialing back expectations on the pace of rate cuts from the Federal Reserve. Recent economic data has pressured equities, indicating a resilient economy with nagging price pressures. Comments from Fed officials have pushed bond yields higher. The S&P 500 had weekly losses in 4 of the last 5 weeks. Promised tariffs from President-elect Donald Trump have also fueled worries about inflation. Markets are pricing in about 27 basis points of cuts from the Fed this year, with a 52.9% chance of a June cut. The S&P 500 gained 0.1%, while the Nasdaq Composite lost 0.3%, and the Dow Jones Industrial Average rose 0.8% to 42,297. Back home, the JSE was green across the board. The all-share index gained 82,746. It was up at 0.8%. The rand firmed to 18.99 to the dollar, at 19.48 to the euro, and at 23 rands 12 cents to the pound. Gold is trading at $2,665 an ounce, while platinum is at $951 per ounce, and Brent crude oil is at $80 a barrel. So our market commentator for today is Martin Smith. He is with Anchor Capital. Thank you so much for joining us, Martin. Today is a very, very important day, as in we are seeing a lot of the matric students celebrating, and we're seeing most of those who have done well. But when we look at the economy of South Africa, we start to wonder, the kind of career choice that these young adults will have to make that will add to the economy. Which direction can they look at?
Yeah, so firstly, a big congrats to all those matric students. I know it's a big day, and it was obviously a tough set of results. I know I have to think back about 20 years from when I wrote matric, but yeah, again, I think it's very well documented that the South African economy has been struggling, or maybe not growing at the pace that we would like for the last few years. I think if you look towards what's been happening in the last kind of 6 to 12 months, I think there's a renewed optimism around the local economy. You've got interest rates coming down. You've got the two-part system adding money into the economy as well. And you've also got the issues from load shedding also being a bit of a help from an economic perspective. So you add to that education, I think it's also a very positive part of the economy, because as we increase skills and education, we get more and more output in the economy. So I think any little bit that we can get, any bit of kind of skilled output into the economy, I think is a good thing from a South African perspective. And like I said, things are looking more positive than they have in a very long time, and I'm quite proud of that from a South African perspective. Yeah.
Could they think of becoming stockbrokers like yourselves and work at Anchor Capital? And what would they need to become stockbrokers? Tell us.
So if you want to become a stockbroker, I think any type of BCom, anything involving investments or finance or accounting or things like that is kind of the direction that you can go. You can obviously always do things like CFP, CFA and the like, and then try to get your foot in the door somewhere, and then work your way from there.
All right, let's get back to looking at commodities. The price of Brent crude oil, I've been monitoring it since last week, and I see that it has been going up and up and up. The factors behind that, won't you tell us about those?
Yeah, sure. So I mean, with oil, it's very much a supply-demand dynamic. So on the supply side of things, we've seen news that's contributed to this increase that you've mentioned, where you're having a banning of Russian imports by the states. So that technically has led to supply going down. Whether that actually kind of happens in the medium to long term, we don't know, because oil can always find a route somewhere else. But for now, that's led to an increase in the price because technically the supply has gone down. Another thing to think about, not affecting the price now, but something to take into consideration, is Donald Trump has spoken about increasing the supply out of the US, which would be bad for oil prices. And on the demand side of things, you obviously got to look towards global growth, where we expect slightly subdued global growth this year compared to last year. So that's obviously going to impact the demand for oil, which again brings the price down. So all of these things, while you've seen a short-term bounce in the oil price, like you mentioned, around those Russian imports into the States, I think the more medium-term outlook for oil is, I think, still a bit muted from here, but anything can obviously happen.
Yeah. Another thing on the international diary is the U.S. inflation data due out tomorrow, I think. Yeah, inflation data due out tomorrow. What can we expect there? And also, I know that ours is only next week, where we're expecting our own inflation data. Or what do you at Anchor Capital think the Stats SA will say when it comes to us and for tomorrow with the U.S. inflation data?
Yeah, so I think we can even take a step back, and the reason why all this inflation data is so important and why it's weighing on markets is because what does it mean for interest rates? And I saw you mention at the beginning of your show that expectations around interest rate cuts in the States are starting to get pulled back a little bit because inflation is being a bit stickier and a bit harder to go down, or harder. It's proving harder to go down than we initially anticipated. So if interest rates aren't going to come down as much as we think, that means that it's bad for equity markets. So I think that's what's been the big kind of it's been weighing quite a lot on the US economy. Here, while we're finding inflation a bit easier to go down, obviously we're around about that 3% mark, which is in between the 3 to 6% kind of band that we look for from the SAB. I think you've also got to be cognizant of bringing down your interest rates too fast relative to what the States does, because that can obviously have an effect on the currency. So a lot of moving parts is what I'm getting to. But I think the big thing is what inflation means for interest rates, because that's the big thing that's affecting both the currency and the equity market here and abroad.
Martin Smith, thank you so much for making sense of the markets for us. Martin Smith is with Anchor Capital, and he was our market commentator for today.